So tonight, this is a really important class, I think, especially for day trading, right? I mean, volume's important for swing trading too, but VWAP is really important for day trading. It's not really something you can use with swings. You could use it even for, if you are swinging a stock, you use it to help get your entry. But really, the reason we're combining these two together is because, hold on, I need someone to mute.
He's not a teacher. He told me that today. He's like, I told him from the beginning, I'm not a teacher.
Mike Gambino, mute. All right, there we go. All right. So yeah, there is a reason we're covering these two together. You'll see Billy mention them a lot, VWAP and volume. I'll go to the first agenda here, right? So we're covering VWAP and volume. We're going to start talking about what's VWAP, how it's calculated, why it matters, and how you see Billy and us talk about it acts as a magnet. It's a pivot in the market pretty much. Time frames to use it on, how to use it in long trades, meaning not like long term, like meaning actually longing a trade and then shorting a trade, because VWAP works great for shorts as well. And then volume we have also, which is a key component of VWAP. All right. So I'm going to get right into VWAP itself. So there's a little blurb here that Claude gave me. The lines that the algos watch, the line the institutions defend, the most reliable intraday reference in the market. And there's a reason that is there, because VWAP is not just something that we're using, right? Institutions know what we're looking at. So they're also going to use these tools as well. These prices aren't bouncing at random spots because me, Billy, and Brett are buying it or selling it there. Institutions are making the moves happen, right? So VWAP, literally, the reason we're covering it with volume, VWAP literally stands for a volume weighted average price. So this is the definition by book here is the running average price the stock has traded at today, weighted by volume. It resets every session at 9:30 a.m. and represents the fair value price where the most volume has transacted, right? So you'll notice this part right here. It resets every day at 9:30 a.m. Futures is different. So when the futures index open, if you watch ES or NQ, you'll see VWAP look kind of funky off the open, because that's where it happens. So one thing I just want to call out, VWAP and volume go hand in hand. Like I said, VWAP literally has volume in its name, and they're both crucial to understand to combine with each other in your trading plan, right? So, like I said, this comes kind of straightforward here. Institutions, hedge funds use it. It resets every session at 9:30. The formula, not necessary to know. I'm not going to calculate VWAP. None of us are calculating VWAP. It's on your chart already. Cool. Okay. So how to use VWAP in day trading. You see Billy mention it all the time. I like to think of it as your pivot point. You see price gravitate towards it kind of when you're floating above it. It gives you a gauge on whether we're bullish or bearish. And it also could be used as an entry for a short or a long. So the general consensus is that when price is above VWAP, price is bullish. Price below VWAP, price is bearish. And again, this is really more for day trading. This is for intraday timeframes. You're not going to be using on a swing. You're not going to be like, oh, I'm bullish on Tesla. Long term is above VWAP. No, that's for intraday setup. Does that make sense to everyone?
Yep.
Okay, got it. So let me go to the next one here. Like we say, VWAP, it's a magnet and a pivot. It's not just some random line in the chart. It literally acts as a gravitational zone. And also, now that you guys are day trading, and especially when you're following Billy's plays, you'll see a lot of times that algos have a lot of action happen at VWAP, because institutions are using VWAP to kind of gauge their own use their own executions on that, right? So if a hedge fund's looking to buy, say, 1 million shares of a stock, their traders at their institution, they're going to look to buy it maybe at or below VWAP. If they buy it above VWAP and get a bad fill, they're not in a position to be where they want to be beating the market, you know? So, and the same thing on the sell side, institutions are looking to probably sell above VWAP, but that's how institutions are going to act, not us as traders. Us as traders, we're looking to use VWAP as our pivot to gauge whether price is bullish, bearish, or we're looking to get our entry. And like we said, it acts as a magnet. So when price runs too far from VWAP, you kind of get that mean reversion. I don't use this as a mean, but it still acts as that kind of same concept with a magnet. And I know some people had asked about their indicator using the upper band and lower band on VWAP. So that's kind of the point of that, right? With that kind of gives you the exhaustion or the extension point. When you're over VWAP and you're up to that upper band, that's usually the point you might get a rejection and the pullback to VWAP. And on the flip side, if you're under VWAP and overextended when you're under VWAP and you get to that lower band, you can sometimes get a bounce trade where it brings you back up to VWAP and maybe offer an opportunity to short it there. And I'll show you some guys examples on the chart. So VWAP serves a lot of purposes. It acts as your pivot, it acts as a magnet for your mean reversion concepts, and it also acts as a point of support and resistance. And I also like using it as a point of confluence. Sometimes, like I know Billy, you like the 21 EMA, so do I. I'm a big fan of it. When you have the 21 EMA stacked with VWAP, that's a great spot for a long entry. You got double confluence there. Or you have VWAP stacked with a level of support. So say Billy's like, hey, enter this XYZ play at $1.50. VWAP's also there. That's double confluence. So it serves a lot of purpose in that aspect. And I'm not going to just only read sides, guys. I'm going to get into some examples. So I just wanted to go over some of the basics first. But do you guys have a good understanding of what VWAP is and why it's important and that it's literally volume? It's literally a key component of volume. It's not like your volume indicator where it's going to tell you, hey, there was 1 million shares traded here, but it's a key component of volume in combining the two together. Anyone have any questions on the basics we just did?
Also, like just like a battle between the bears and bulls, think of it that way. So bears are obviously going to try to keep the price below VWAP because they have full control under that pivot point. And then obviously on the flip side, the bulls are going to try to keep price above VWAP. So, you know, when we're getting breakthroughs and confirmations or bounces off VWAP, obviously, you know, bulls are in control there. And also on the small cap side, which is kind of interesting too. I've noticed, and especially on the really small float stocks, the ones that we see go like absolutely insane. When price touches that upper band of VWAP, sometimes they create like massive short squeezes. I've seen it happen before. So sometimes, like most of the time, yes, like you'll hit the upper band and then like, you know, kind of settle back down to VWAP itself. But I also see it that, you know, sometimes in the right conditions where the market's crazy on the small cap side, that condition, when you keep pressing up against that upper band, creates like massive short squeezes as well.
Yeah, and
So when we
Billy,
see it,
it's a
like,
good point, Billy.
yeah.
Like you see it even more with
Mhm.
small caps. Like those moves outside those bands are explosive.
Yeah, and like, and just because, you know, a price is hitting that lower band doesn't mean it's a good buy. Like I've seen it that, oh wow, this looks oversold. Everything looks like, you know, it could bounce from there, and I see the lower band get lower, 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 right? So but yeah, when we see something really crazy happen, which I'm sure will happen soon, where there's just like nonstop halts and super low float stock hitting those upper bands, you know, just I'll try to call it out for you guys, but we haven't seen it yet.
I'm not going to go over this too much because I don't, again, I use Claude for this. I don't agree with this only trade long or prices above VWAP. I think there's conditions where, I mean, for me at least, if you're trading futures, there's conditions where I'm not only longing above VWAP. Billy, I don't know for you, for small caps, I think you generally do look for VWAP reclaims for safer longs. Is that right, Billy?
Yeah, but there was a
Yeah.
good example today on Akan, AKAN. I think that was this morning. Yeah, my days get all mixed up with these stocks. But yeah, this morning in pre-market, let me just pull up my chart. One sec.
I could pull it up for you.
Yeah, I got it. All right, so
What is it?
I
AKAN?
actually, yeah, AKAN, in pre-market, I actually called out an entry of $14, which was prior kind of support level in pre-market from about 4 to 6 a.m. And if it held 14, which was actually a price below VWAP, my target was to retest VWAP. So that was actually a play too. If like a support level holds below VWAP, you know, in pre-market or intraday. Yeah, if you go to like pre-market hours.
Let's say it's Thursday. What time? Like 6?
Yeah, I mean from like 4 to 8 a.m.
Okay. Yeah,
Just kind of like
this is
zoom
right
in.
here. Here. Let's
Yeah,
zoom in.
and is 14 if you could highlight $14. Um
4.
Yeah, you can see that right there at 7 a.m., right? About 7:15. You
Yep.
see that green hammer candle right there?
Yeah. Oh, we're at the line. Yep. Yep.
Yeah, so that's what I was looking at. So that was basically a back test of like 3 times to that $14 level. It was actually under VWAP, but it was a support level that I liked, that if it held, I called that an exact like retest of VWAP as a target from that support level. And this was like a multi-day runner. It was 3 and change yesterday. Bobby actually called it out. You know, I wasn't really active much yesterday because I didn't love the market. But that was obviously like a marijuana stock with the whole, news, that went out that really took off. So if I set up that $14 level held, that was actually below VWAP. So some people could think, hey, that's bearish action. But if you couple it with a prior support level underneath that VWAP level holding, you could actually retest it as a magnet, which it did. And then as you can see, um, around 8 o'clock, 8:30, it tried breaking above VWAP, like a couple times, right?
Yep. And rejected
And overall
hard.
just got rejected, and it just had a bearish bias throughout the rest of the day.
Yeah.
So
And then also too, Billy, once you broke 14, it got even harder to sell off. And then it gets to
exactly.
14
So yeah, like
rejected.
when those support levels, fail, they become resistance levels, right? Because obviously there's going to be a lot of supply there versus demand what it previously was. So, the bulls couldn't keep it above that 14 level. It was just kind of a quick scalp play, but obviously the bears took control after that 14 level broke. And then
That's why I
obviously
said
you
it's
could,
not a
yeah.
direct, like Billy, thanks for showing that example, but that's why I said it's not a direct 1-for-1, only above VWAP look to buy, because I think you have to, that's why we're kind of doing these classes in the order we are, because you're meant to combine all these tools together to use it as a system, not just say, oh, we're below VWAP, we're bearish, I'm not buying it. No. Or, oh, we're above VWAP, we're bullish, I'm buying it. No, because if you just said that and you bought it this candle, you would have lost money, you know? So you have to combine it with support, resistance, your EMAs. Colin, my bad. You had your hand up for a minute.
You're good. My question was, do you guys recommend using the bands that come with VWAP more often than just turning it off? Like the upper and lower
It
bands?
depends, I would say. So for me personally, I use VWAP as just a tool for added confluence, as it's like the gravity point of the market. But for me, with mean reversions, I think I mentioned to you before, I use like these volatility base bands, but that's combined with the mean. So if you want to, I mean, you could use the yellow lines, my mean. You could use the VWAP bands, but I would say if you use the VWAP bands, use it with VWAP for pullbacks to VWAP, you know? And like, say I use the volatility bands, I use those for pullbacks to the mean. So I think it depends which. Billy, do you use the VWAP bands?
I really don't, to be honest with you. I think
I
for
noticed on your
me,
chart when you showed it one day, but it just
yeah,
happened to be
they're
on
on
that
there,
time.
but I don't really. Again, if price action's actually really pressing against the upper band, and like I was saying, that the float's low enough, you could really see like an explosive like parabolic move, which I've seen on a few of these stocks. But another good example too. I don't know. I don't want to get too off topic, but AUUD.
Yeah, I'll go
That
to
was
that.
like a perfect example this morning, which is
AUD?
sick. AUUD.
AUD. So Colin,
AUUD.
I think Colin, it depends if it depends what you're trading. But like Billy was saying with the small caps, when you get those moves to the outer band, sometimes they break through it. If you're trading SPY or QQQ, you might want to use those outer bands because you get those kind of mean reversion type plays with them, you know? So I think they might be more valuable on SPY or QQQ trades or any large caps. But it seems like with small caps, from Billy's point, it's not as definite because you break out of those bands pretty often, right? Because those moves are momentum plays, so you'll get those crazy moves.
Yeah, so this one's sick. Like, so we'll start with the first kind of time. Yeah, if you go to about 6:30 in the morning, that was a good example. So the purple line in this chart is VWAP, and from about 6:30 to 6:45, you see that it's kind of hovering above VWAP, and then you got that confirmation and that break above, right? So right where your candle was, right where your cursor was. I'm sorry.
Yeah.
To the right, one more to the right. Yeah, that's your breakout candle.
Yeah.
So you have just price action that's pushing above the highs or the wicks of the previous candles, and you're pumping upwards. And again, once you get to that higher zone, I'm trying to see them on my phone here. like I always am, because I only trade from my phone and do anything from my phone. So yeah, you get that zone right up there, right?
You got to move.
And obviously, you
was
can
the
see there's
reverse
just a lot
there.
of consolidation. Yeah. And then again, you see that big red engulfing candle breakthrough VWAP right there.
Yep.
So again, just like we said, it's kind of a magnet, right? So anything that's trading above VWAP technically will pull back and test that line. But what I really like is from about, I think that's 7:30 to 9:30. You have a really good 2-hour window of consolidation right before market open. If you want to highlight that, Jay.
Yep. Here, I got you. So from like 7:30 here.
Yeah, as soon as you break through that, right? Yeah, exactly. Perfect.
This period here.
Yeah, and so
Consolidation.
what I said to you guys in my channel was, hey, 725 key level, right? So when we coupled that with this strong support zone of consolidation, I don't know what the price is there. I'm trying to read on your chart.
We got
660,
from
right? Like about
from like
660.
6.5 up to 775 was the range we were trading in for that 2-hour period or so.
Yeah, so that's
you
like
know.
a strong support. Like every time the bears tried taking the price through and pushing it lower to a previous like breakout zone, right? They couldn't do it.
Mhm.
And then once we couple that with the bulls breaking a bear VWAP, breaking above VWAP at market open, it was just like the perfect storm to create chaos. And there wasn't even a back test of VWAP. It just kind of exploded up to like $10. And just always make sure you're not chasing the move because I highlighted it out. It was like $3 a share gain. But again, people like me, I'm trying to sell at $10, not chase it.
Yeah.
You got to keep in mind all the smart money's like unloading at these levels. And I think pre-market high was, what was that? I think about $8, right?
Yep. 880 looks like at
880.
at 7
Yep.
a.m. 880.
So in intraday action, if that price holds 880 pre-market highs hold, you could have a basis for more continuation and a push upward. But again, once that pre-market high broke through, bears took full control and it like dropped to $5 today. So
And that's what we talk about failed breakouts, guys, where you don't chase breakouts ever. Because if you wanted to say you wanted to play this long over pre-market highs, you would wait for your candle to back test here and then enter long. You never got that. So it was a failed breakout, and look what happened after. It went to shit all day. So
and that's the pivot point we're talking about, that price under VWAP. Bears were in full control. And if you had the bands on there, sure, like $7,
let's
$6.
put the bands on. I'll show you the bands column so you can see.
Yeah. But the problem is sometimes like there's no such thing as too low and the price can keep going lower, right? So if you add the bands on VWAP.
Which one do you use, Billy? Which one? The band one? Oh, we see.
Standard be honest,
Should be
deviation.
a style, I think.
Which one do you use?
Like
One?
that's cool. Hold on, let me see what my settings are. It's been a while since I've honestly looked at them.
2, 3. I don't know. I would never use all three of these. Definitely, I would say that. Definitely don't use all three of those. Because that I think 2 would make the most sense. Let's see. Yeah, 2 looks like it makes the most sense.
2, yeah. I'm at 2. Yeah.
So and kind of like you kind of see though when you snap back to the band, you're kind of trading inside the bands here. Like price couldn't break out the band, came back to VWAP, failed, rejected VWAP, broke over, try to break out of the bands with this pre-market high, and you got rejected. So
but like
that
something
was
to stress, right? On small caps, just because you test that lower band doesn't mean you're going to get a bounce to VWAP again.
this is a perfect
Even though
example
we
right
think
here.
it's a magnet.
Look.
Yeah, like you can keep pressing lower on the lower bands. And on the flip side, like I was saying, with the ones that go parabolic and hold up and go crazy, when that price keeps pressing against the upper band, that's when it goes crazy. So never think just because price is at the lower band is that's like a A+ setup to, start buying, because in my eyes, you're just buying a downtrend at this point.
Yeah. So I think, Colin, to answer your question, yes, you could use them, but to Billy's point, it's per case basis. Like with small caps, as you can see in this example, especially when you break below VWAP, those lower bands don't always give you the mean reversion back up to VWAP. Does that help, Colin?
Yeah, I was mainly asking for SPY.
Okay, yeah. I mean, if you want, we can look at SPY really quick, and then I'm gonna go back to the. So let's see SPY today. I know for a fact with the volatility band, SPY will be great to look at, but let's see with the number 2. Yeah, it looks way more reliable with SPY.
Yeah, like for small caps, you can't, here you see obviously you touch the lower band and you bounce off
A
and
crazy
magnets it.
snapback.
Right. But you
You
don't,
know.
that doesn't really happen with small caps. And I think that's important to like differentiate.
For sure.
As you guys are looking at this, right? Because
Yeah.
there's different like test cases.
For sure. So yeah, Colin, I think for SPY or QQQ, definitely, or any large cap, it'd be helpful.
Okay.
But let me go back to our presentation here. Quick check. Everyone has a full understanding, decent understanding of what VWAP is. So as quick summary, think of it as the average price the stock's traded at in a certain day, and it weights every trade by how much volume happened at that price. Obviously, heavy volume is going to count more, and light volume is going to count less. But what you're going to end up with based off of that is pretty much the VWAP line is representing the fair price of the stock at that day, like the overall consensus price. Does that make sense? Was that a decent enough explanation?
Yeah.
Cool. Okay, I'm not gonna go too much into these. This obviously, Billy talks about these often. Your VWAP bounce. You also get failed breakdowns at VWAP, and you get a reclaim. You could also get failed breakouts at VWAP. We were talking about this before. Your confluence. So if you have VWAP lining with a major support level, you also even has here. It says target these move tend to run trail with 8 or 21. I also like to use the 21 as confluence, so the mean as confluence with VWAP. So meaning you see price retesting VWAP and the 21 EMAs there, or you see prices retesting VWAP and you have a major support level there. Or on the flip, say your price is bouncing but it's running into VWAP and you have a key resistance level there, you might get rejected. So you don't want to be long direct into that. Billy, I think this is a good example. You just showed that stock we was looking at, that open and drive reclaim at the 930 open, that last stock we were looking at. You got that pretty much broke right through VWAP on the open.
Yeah, I think the past like 3 or 4 days we've had that.
Yeah.
I think Monday was insane. I don't know if you want to pull up FCHL.
Yeah.
That one was if you pull up that chart from Monday, that was insane.
Actually, no, I have it in I have a slide for it.
Okay.
Yeah.
So I don't know if you want to go to some of those examples
Yeah,
or we'll wait. But
I'm not gonna do the same thing I was talking about. Same concept on the flip. XRTX.
yeah, like all of these. So these are every single day I've called out the same strategy. So I don't know. I guess go to FCHL. I like that one the
FCHL?
most because that
Okay.
was like
Yeah.
100% gainer from Monday. So I'm just zooming in.
Can you not see that well? I'll just pull up the chart if that's better.
No, I mean I think I could see it, but basically at 9:30, 10 o'clock, it looks like from this chart. It's a little blurry, right? I saw that we're heading up towards that VWAP level. And again, you could take a trade technically if you think, that price action is going to test VWAP, but I like to see confirmation for like a A+ setup. But at 10 o'clock, you see that breakthrough on that purple line and that retest. So this is what we talk about for confirmation.
This is from Monday, right, Billy?
This is from Monday. Yeah, this was an awesome
Okay.
one.
I'll just pull up the chart for you. It'll be easier for you to see.
But these are like the home run plays. And it's not going to work like 10 out of 10 times, right? I mean, but the win rate's very high on the
If it works
strategy.
7 out of 10 times and you size properly, that's a win to me.
Yeah, this is it right here, right? Okay, hold on.
Okay. So this is Monday at 6 a.m. So this is your pre-market pop you had.
Yeah, so very interesting. It was like a pump and dump pre-market on Monday, kind of like a round trip. I think it was like 40 cents to a dollar, back to 40 cents. Hold on, I'm just zooming in. And then if you go to market open, right there, you got some really strong bullish candles to open up market
also,
open.
You had like a test of a level here. Well, we had a wick here in pre-market, right? At 0.43, and you kind of did like a little failed breakdown there at 9:30.
Yeah, it was kind of like, I call these like pandas, pump and dumps. That's what I call them. I call them little panda bears, right? So basically, they're round trip trades. They go up, go back down, and it happens a lot on small caps. That's why I like to be patient with the ones that hit my scanner. because, you know, in 5 or 10 minutes, they could give up all their gains. But as you can see here, coupled with support, there was a nice kind
I'll
of
go to 1
magnetic.
minute for you so you can see better
That's fine.
for the
Yeah,
entries.
just zooming in on like market open.
Right here. Open was right here, 9:30. You had this little drop here at 9:33.
Yeah, so as you can see, it kind of rushed up to VWAP, and once we breached through VWAP and kind of back tested right there, it was like a few minutes of consolidation, and we had that massive pop. That confirmation there is what we needed to make a sick trade.
And like you have a little, this is a 1 minute, but you have a nice little flag shaping up here. Like price never really fully broke down under VWAP. This is what we were talking about too with those failed breakdowns. This is a good example of failed breakdown at VWAP, you know? So you have to realize too, institutions know that traders are looking at VWAP. So guess what they're going to do? They're going to try to fake you out of this position and make it look like it's going to break down, but it didn't break down here. It was a good failed breakdown setup here. You know, trap some people trying to short it and rip it higher.
Yeah, and then if you go to where it kind of failed, right? So when we hit, I think it was about $1.20. I think I actually called the exact top on this too. I said in the chat, don't chase.
Like yeah,
I said like $1.20. I'm like, this is gonna drop.
Yeah.
When you have such a strong, like, first of all, when you break $1 and you're in that $1.10, $1.20, I always expect to pull back to $1 because that's like a psychological support level.
Mm-hmm.
So it did that. I think I even called like high 80s, low 90s for a pullback, which it went to that level. You popped back up to $1.10. You couldn't make higher highs, right? So at this point, you're making higher lows.
And then try to hold the dollar right here for a second too. Sorry, right here. You try to hold a dollar like you said.
Yeah.
You know.
And again, as soon as you just couldn't like make those higher highs and, you know, at least retest that $1.20, the bears took over, and then, you know, they took control, tested VWAP, just kind of like destroyed VWAP. There was not even any retest at all, and
barely. You had this one little wick here, and that was it. And it was a no.
So you guys always want to make sure you're trading that uptrend. If you see that higher highs are like failing to, you know, materialize, and you're kind of stalling out with price, you don't want to chase. You know, that's just like your uptrend has failed. Then that's the start of your downtrend. So you could actually, on large cap names, kind of like short that. Which car, when I shorted at 800, would have been freaking epic, but I didn't hold it.
Yeah,
that would have been a legendary trade.
This is a good example, another example of why you just don't say, okay, we're above VWAP, we're bullish automatically. No, because you need to combine support and resistance with it. Now, okay, we're above VWAP and bullish, but like Billy, you called out over $1, potentially don't chase this. And once we went over $1, we couldn't hold that as support. And once we lost that key support level, it was a straight sell-off, you know? That doesn't mean we were above VWAP when we sold off, but that's why you combine this as a system. You're combining your VWAP and you're combining support and resistance with this, you know? And then obviously we have our moving averages we use as well, the 8 and 21, but we're not going to overcomplicate this. We want to keep it about VWAP for this chart. So
yeah, you guys just got to think, right? Like when you're, say I got it at 60 cents and I have 1 million shares of this, like you're going to want to unload. You just ran 100%.
Yeah.
Anything that's overextended is just going to naturally come back to, you know, some kind of like mean reversion point, which Jay talks about, these moving average lines or VWAP. So, you know, your risk reward's out the window there if you're chasing it. Especially like if you're failing to make higher highs, like just don't touch it. Like, do yourself a favor and don't even try to get that few pennies or whatever you're trying to go for. You're going to get burnt. Because in like a few minutes here, you could have been down like 20%, 30, 40%. And that's kind of how these work. The second that a downtrend's, you know, started, you're cooked. So
yeah,
guys. VWAP is really like the smaller time frames is where you really want to use the VWAP because that you know for the longer time frames you're not really looking at the VWAP because it resets every day. So just think of it as like a tug of war. That line is the middle line, and then if the buyers take control over that line, make it simple. You know, if the buyers are taking control of that line, that means bulls are in charge for that day. So like if you're scalping a large cap name, you know, you always want to see break of VWAPs and have a bullish form above the VWAP. And even if it breaks down, you want to see VWAP hold as like a support level. It's your smaller time frame support and resistance for the day. If I'm explaining it correct. So yeah, I would not be using larger time frames and
No,
using
and you really
VWAP.
can't. You're not gonna even see it properly on the chart. You
Yeah.
know, like, but if you're like, say, Brett, you mentioned Tesla. We were talking about Tesla at 370, right? If you're looking to get your entry intraday with using VWAP,
100%.
then you use
You
it.
want
Like,
if you
let's look
want
at
to know
Tesla.
the exact dollar to get into Tesla on that day, you're gonna look at VWAP for that day because that's gonna tell you where your buying point is. You know, breaking above the VWAP or breaking below.
Look, like, so this was obviously the earnings pop, right? And look, even on Tesla, how price reacted when we broke under VWAP after hours. And then look, like we said, VWAP resets every day. This is when price opened again the next day. You see how the line looks funky here. Now we're back at VWAP. But say you're looking to get in Tesla, what do we say? People are looking at 370. But look, price is pretty bearish right now, intraday under this level. So what you want to see if you're trading if you're trading Tesla maybe tomorrow or at some other point this in the next week is you want to see it reclaim VWAP maybe for your entry intraday. This is not going to impact your strategy a year from now if you're holding Tesla shares. But if you're trying to be precise and get a good entry, you will 100% be using VWAP for this.
Along with looking at support levels, like you don't just
Exactly.
use VWAP.
No, please
because
don't.
you're gonna
Please
be in
don't.
no man's. You're gonna
Yes.
ruin your account just
Like,
using
look,
VWAP.
if we're on a daily look at VWAP right now, it's not telling us anything. It's not doing anything. There's another tool called Anchored VWAP that people use, right? But we're not going to talk about that right now, just regular VWAP. But does that make sense to you guys, how to use VWAP? And like Brett said, like, think of it as the fair price of the stock for that day. It's intraday tool. Think of about the average price that people or buyers and sellers are willing to pay for that day. This is where it's at. And whoever controls it below has control of it, or whoever has above control of it has that control. So bulls
And the
obviously have
magnet
control above
theory
it.
is 100% correct. I mean, every time the prices look, every time it acts as a magnet. It's price gets too far below, it's gonna work its way
Bounce back.
back up to the VWAP. Yep.
Here, Colin, I'll put the bands on for you, Colin, so you could see what those.
Yeah, at least on large caps.
Yeah, no, on
'Cause-
large caps, the bands work great. So if you're trading spot, like, look, this sell-off was super overextended. And after hours, you still, even though it still came back down again, you still like price sellers can't just keep selling and selling and selling. Buyers have those relief bounces where some orders get filled that and then they reshort it. So you kind of saw that with Tesla. It came back down here to this lower band and then snapped back up. Got over VWAP.
And guys, if you're trading Tesla, at least for me, I've been watching Tesla earning calls for years. Early move is usually the fake out on Tesla.
Yeah.
So there was a lot of buyers that came in with the FOMO and were like, "Oh my God, they beat earnings," and then look, they got trapped. They got bag holding.
Yeah, exactly.
Now what?
And right over $400, like we talk about key levels too, right? So when you're combining this, honestly, this was it's a risky short, but a huge fail breakout over $400 is the key level for Tesla. You broke outside the lower time frame bands, and boom, look at that. That's a massive failed breakout using support and resistance and VWAP and the bands, and you could have had a beautiful short.
Yeah,
So
that's why we're over 370, and I even said 365, which it almost got there. But we knew
I think it
those
was gonna get there
levels.
for you, Billy.
I think it will too.
Yeah.
I can't say we're done. I don't think this whole market situation settled. I mean, I'm a small cap guy, so I'm not going to speak on any of that. But
Tomorrow will be telling.
It will be for sure.
I say nothing's ever certain with Trump, man. So I think we all know that.
Cool. So do you guys, I'll stop here for a second. Does everyone have a decent understanding on what VWAP is and how to use it at least? And if you don't, feel free to ask questions if you need me to explain it again, like a basic explanation of what VWAP is or how to use it, or was that helpful for y'all? All right, so Nick gave me a thumbs up. No one else has camera on
No, that
besides
was
Justin
helpful.
and Nick.
Thank you.
No, that was
All right.
super helpful. Thank you.
Cool. All right, I'm glad you guys understand that. And again, I'm going to emphasize intraday. Do not get it on a swing chart and tell me where VWAP's at, please. So I'm going to say you guys didn't pay attention then. All right? Cool.
Yeah, I mean, it's really your bread and butter for the small caps. Especially market open is like the biggest thing. You'll see.
100%.
And if we could build this bot, which we're going to try to do, that just alerts us when my 5 stocks, whatever I pick out for the morning, if they, hit or cross VWAP, if we could send an alert to the group,
That's
I
gonna
think
be
it'll,
huge.
yeah, especially like when they cross on like 12 o'clock in the afternoon or whatever it is.
You forget
like
about it. You
sometime-
forget about it in the middle of the
Yeah,
afternoon.
like,
so.
I don't want to be staring at charts all day. You kind of lose some of your freedom at that point, right?
100%.
If you're staring at charts from 9 to 5, right? And
Then that was
I
the point.
stopped
You might as well
posting
just
a
work your 9 to
lot.
5 regular, and that's it. If you're gonna stare at charts.
Yeah, I just stopped like posting a lot at 10:30 or 11 because I know what the market's going to do on the small cap side. Unless we have something that's going 5, 6, 7, 800%, and there's room, like I'm not going to be forcing stuff. Been there
Yeah,
and done
guys,
that for many years.
whenever we're quiet, I said this before, whenever we're quiet, that means that we are in a place of uncertainty for the market. So don't think that we're not trying here. Don't think we're not looking at the market, not caring about you guys. It's just simply that I don't have any plays that I can give you that would be, that would be hitting 100%,
And I'm not gonna force.
So-
We're not gonna force a player to find something just to make you happy. I'm sorry. I'm not gonna do that because you're gonna lose money when it doesn't work.
Yeah. And a lot of time the best traders out there, you'll see they're done by like 10:30, 11 o'clock. Like we all kind of hit our profits. We're done for the day. Like if you're going against like market algorithms and low liquidity and volume at, post 10:30, 11 o'clock, sure, you might get something, and you might get like a power hour setup. But if you made your money, like stop trading, like walk away, do something better with your life. Like,
Nothing
not gonna-
worse than
And-
going.
and-
you're not
and
gonna
the
pull
higher-
anything out of a hat. You know what I mean?
And the
So-
higher the indexes go, the more stuff dries up. We're looking for opportunity and discounts here, right? We want to buy low, so we don't want to buy high. So everything over every sector. I mean, everything is overpriced right now. So we want to find discounts. You don't want to be buying something and then a week later saying, "Oh shit, why'd I buy it?" So
yeah,
it's all
Don't buy
about
high and
it's
sell
all
low.
about timing. It's all about timing in the market.
Cool. So this one is super important, and because it really is what drives the market at the end of the day. Volume is literally the foundation of how the market works. I always talk about this, not volume, but in general. The only way price moves up or down in the market is if there's more buyers than sellers or there's more sellers than buyers. There's no other way price can move. And if someone has more money or could put more volume in the market, they can undoubtedly move the market themselves, So when people say, "Oh, why this stock go higher here? Oh, because Trump said this. Oh, because that person said this." Yes, maybe that was the catalyst that moved it, but ultimately it simply comes down to buyers versus sellers, and what drives buyers versus sellers is volume. So I'm just gonna do a quick overview of volume, and there's a lot of different tools to use for volume. So volume is the total number of shares or contracts traded during a given period. It's a measurement of activity and participation. Price tells you where, volume tells you how seriously. This part is key because your volume is your confirmation that tells you how seriously. And this part's also key. It's a measurement of activity and participation. When there's low liquidity in the market, that means there's not a lot of people buying right now, or there's not a lot of institutions active. That's when you're more prone to fake outs. You're trading with algos. You see just like kind of how we've been trading at all-time highs. At all-time highs, you're pretty much in no man's land. You're in low volume. The market's in price discovery mode. You get random volume spikes. You get just random movement out of nowhere.
And you could even see it daily with the lunchtime, when the volume dies down during lunchtime, it's every day we see the volume go on and off, So it's all cyclical. So you got volume's number one for making money in the market, like Jay said. That's what's driving the price movement.
And sometimes, Brett, too, I don't know, I'm sure you know from looking at charts all the time, you could look at how candles are moving without looking at a volume indicator to tell you that volume's light. When the candles are moving super weird, like they just randomly appear on your screen on a 1-minute chart, volume's light. Or even some charts you look at, the candles look illiquid. You could tell when volume's light. And those are the times you really don't want to be in the market, or you want to be super patient and only entering at your certain levels you're looking to take the target. Otherwise you're just trading in the middle and you're almost gambling at that point, especially on low volume.
Yeah, and especially for like plays like Billy, that's
I was just
all-
gonna say,
yeah.
like, when I'm calling out stuff that there's 100 or 200 million shares traded in pre-market, that's like huge volume, right? But as you can see, the past few days, we've had like maybe 20, 30 million shares, 40 million. Just when you have more amount of shares traded, there's more liquidity, or when there's setups that trade 1 billion shares in a day, like I'm confident that if I buy certain dips at certain resistance or support levels, that I'm gonna get a bounce and just keep making money all day. But volume is so important.
Yeah, volume is like kind of like, when you go to a Knick game and they're like, oh, everyone makes some noise, and you see the meter going up, more people make more noise, and the higher the meter goes up, the more people are involved. That's literally what volume is. The more people involved, the more you're going to see those candles move. The less people involved, the less you're going to see the candles move.
Yeah, the volume's low on the Knicks game tonight. Let's
It
just say
is.
that.
What's the score right now? Oh, they're down by 9. Oh, down by 8,
78.
bro.
Yeah, they're coming back, but not happy. But I won't hijack this meeting with my
No,
Knicks.
you're good. You're good. Okay. Yeah, so like I said, high volume means there's strong participation, and always this says strong institutional participation. Whenever volume's high, it's going to be institutions. When volume's low, that means like you see the vacation periods, or like when Brett mentioned during lunchtime, these big time Wall Street traders that have money, they're not sitting around all day at the screen trading lunchtime. They're out enjoying their lunch break, getting sushi like Brett does during his lunch. They're chilling, so they're not always on the screens. So, and if they're not on the screens, why do you want to be on trading these low volume, illiquid periods of time? And then we obviously have volume spikes. So we have catalysts that happen. And you guys have to understand too that institutions, they have way faster access to data than we do. So when we have our stupid news bot give us an alert, the institution already knew about that before it was going in. That's why their volume spikes happen like that. And they have algos tied to what happens when those alerts trigger. They have Bloomberg terminals where they get real-time access to information when they're paying. I don't know how much a Bloomberg terminal costs anymore, maybe 40 or 50 grand for a terminal now. They have real-time information, insider trading, all these things are going on. And that's why you see volume move in those crazy ways when news comes out, especially with Trump as president. His words like have so much power in moving the market. And people are like, oh, he's manipulating the market. Sure, he is. But that happens with everyone. Every president, every government official is making money on the market. Trump just happens to abuse it a little more than others. So, like I said, I'm really keen on emphasizing this, because once you really get through your head that this is all the market comes down to, it kind of changes the game for you. It's just buyers versus sellers. So this is a good analogy here. Every tick on your chart is a handshake. One person hit a bid or sold or lifted an order, bought. Volume is simply the count of those handshakes, and the balance between them tells you who is winning. More buyers, they're lifting the ass, they're paying the spread to get in fast. Aggressive buying, you see those green as volume. You probably, if you're on a DOM, we'll go over what that is, or if you're on level 2, you'll see those prints there. And obviously, the only way price can go up is you have more buyers than sellers. So whoever wants to drive price higher, you need more buyers to do that. And then on the flip side, you have sellers, you have supply. They're hitting the bid and they're taking what's offered. So you have a bid and ask. I don't know if you guys know the difference between that. We'll go over that at some point too. But that's what they're getting offered to get out. The market is called the market for a reason. It's based off of markets, literally markets. So way back in the day, if someone's selling cattle or whatever it is, people are bidding and asking to get in at certain, or asking to get out at certain prices. That's how this market is working too. The difference is some of the psychological effect is removed because we're behind a screen and pressing a button and you're seeing it on a candle. Back in the day when people were trading on the floor, just doing straight floor trading, you've seen this happen in real time, and that there's actually there's a few good documentaries you should watch on that. I forget the main one. I gotta find it, but I don't know if you've seen any of those about trading on the floor back in the day. There's some good ones out there.
I mean,
But
yeah, there's a lot out there.
it's just good to know, because that kind of that's really what's happening in the market, but we get so removed from that now because everything's on the screen,
Well, dude, I'm telling you. So the level 2, the time and sales, it used to be like a tape, literally a tape. So they would see every order that's being executed, and then pick the highest order and then the lowest order. It's almost like our charts nowadays on the computer. They didn't have this back in the day. They would just pick out numbers that were extreme lows and extreme highs, and then find the median price. This was all like ancient. Now it's so computerized, it's insane. That's why we're taking advantage of this. We have all the tools in front of us.
Yeah.
This is what these guys, all the institutions are looking at the same things we are looking at. We could be one of them. You know, that's why we make the money we make.
And that's why they have more fake outs than ever now, because they know we have the tools we do.
Exactly.
You know? Like VWAP and stuff like that. Like I always say, it's not some random line. Institutions are targeting those levels and doing fake outs and traps at VWAP, and they need
I promise you guys, everything we're teaching you, these big guys, the big guys that are controlling the market are watching and doing the same exact thing. So.
Exactly. Cool. I'm going to go to the next one here.
Someone has their hand up, Jay.
Oh, my bad.
Nick does.
So
what's up, Nick?
Sorry, I'm just wondering. So these guys have so much volume that they can do these fake outs by just selling some of their stuff? Or...
Absolutely.
Wow.
So
okay.
It's the money they have that drives the volume. So let me ask you this question. Do you think one person in the world can change the course of a trade you're in?
Yeah, Warren Buffett.
Yes, it's a yes. Like if you're in Apple, or say you're in any play and Warren Buffett hits the sell button and dumps his shares, that stock's going to go down because he has more liquidity and more buying power than most people. He's a market. When people say MMs, market makers are people who drive price in the market. They can change the course of any trade. And
guys, these guys are against retail. Like they make money on retail losing. I promise you they do. So that's why you see these nasty false breakouts. They really try to steal your money. And we saw even with the tariff war and even with Iran war. I mean, they could make the market really bloody where people are like, what the hell is going on? People were selling shit at all-time lows, when look a month later we're at all-time highs again, so
yeah,
that's
COVID too. Yeah,
that's their goal here, is to fake everyone out and for them to run it up without retail involved.
And there's only one way to make money in the market. Someone has to lose on the other side of your trade. Then when you make money in your trade, it's not Thinkorswim's not paying you, Weeble's not paying you. No, you're taking that money from someone else. And the same when you lose money, that money's going to someone else.
They are not your friends.
No.
That stupid car trade today. Someone stole my money.
Exactly. Someone stole your money.
And I had that shit as a short above $800. That was crazy. But it doesn't matter, and I was like, hey, we're gonna get a bounce eventually, right? And they just kept taking it lower. So even when you thought I had confirmation and there was like a base forming and, I saw that first kind of candle on the reversal and they just didn't give a shit. Took it lower. So yeah, never renting from Avis, you know what I mean? Ever. Boycotting it.
But no, volume. So Nick, that's a good question. So yes, that's literally all it comes down to. If someone has more institutional power or more money behind it, you could move the market and you can make someone else lose a trade, or you can make someone else win a trade. So look at it that way. You could just happen to be in a trade, and the reason you're winning it is because someone else is driving volume in your direction, or some other institutions are. So these are the classic volume indicators. I do not use RVol. I've never used volume MA. Volume profile, I know a lot of people trade that. That's like with the HVNs and LVNs. You have like high volume nodes and low volume nodes. There's the classic volume bars. I use more of that. I have another indicator I use for volume. And obviously you have VWAP itself. That's the volume weighted average price that we talked about before. OBV, I never heard of this in my life. I'm not gonna lie to y'all. Brett, have you heard of that?
Honestly, no. And I don't use half these things, bro.
No,
I make trading as simple as possible.
Yep.
You could go really crazy with trading, but people trade every millisecond. They're looking at the 1 minute chart. I make it very simple, and still make money. So
exactly.
Yeah, don't hate on my 1 minute charts.
I think if you were to learn something on here, that's not something I know. I know a lot of people are successful with volume profile. Volume profile traders are pretty good traders from what I've seen. But I don't, again, to Brett's point, I don't think you need to overcomplicate it. I'm not learning volume profile because I have a system that works for me already. And I do add stuff or remove stuff from my system, but volume profile is not something I'm looking to do. But like Brett was talking about before, this is really what so back in the day when people were trading on the floor, level 2, the DOM, and the Bookmap, these are literally giving you that exact same feel. Instead of seeing people do it, you're seeing all the orders and ticks happen in real time, right? Brett,
Open orders. So open orders. So you're seeing the future of the stock, basically. So you're seeing all the open orders. And so the level 2 is showing you who wants to buy and who wants to sell and at what prices.
And that's your bid and ask. You'll have 2 columns. Brett, do you want to? Are you able to share your screen?
I'm on my phone with this, but
no, we got it.
you pull up a level 2.
Second.
So think of it as like a live list of buyers and sellers waiting in line. So now if you look at the time and sales, I'm not sure if you guys know how to pull it up on your brokerage, but on Thinkorswim you could look on the side tab. It'll say level 2 on it, and then you put on the time and sales. That's the tape that I was talking about. So that's every trade that's executed. So the level 2 is the orders that are waiting, and the time and sales are the orders that actually got filled in the market. So the easiest way to read the tape is by using the color, obviously. So the green prints mean the trades are happening at the ask price. That's showing that buyers are aggressive. And the red prints mean the trades are happening at the bid price and sellers are being aggressive.
Give me 1 second, bro. I'm just going to share this while you're talking.
Okay.
I'll let you talk. Yeah. Go ahead.
So if you see a bunch of green prints coming in quickly, that means that the buyers are flooding into the stock. So you could see this action actually happens before the chart is even made, so you can see that the future of where the chart's actually going to go. If you see a lot of red, it means the sellers are taking control. Now, on the left side, you have the buyers. Did you pull it up? You didn't pull it up yet, Joe.
No. Give me 1 second. I'm trying to get this shit going. Actually, I could just go on friggin' Trade8 and pull it up. I'll do it that way. Thinkorswim's taking that long.
Does anyone here use the level 2 or ever heard
thought
of
I
it?
saw
actually
Bruce
never
on
really knew how to
PAPL.
read it.
I would be cautious with level 2 on small caps.
Absolutely. They spoof the
There's a
shit
lot
out
of
those.
spoofing. Yeah.
Yeah.
So spoofing is when even me myself, I could put 1 million shares on the bid and not actually intend on putting 1 million shares on the bid, just in the hopes that other bulls will see that price and be like, oh shit, someone wants to buy 1 million shares. And they'll start buying in.
It's actually illegal to do that. But the chances of the SEC catching you, is very slim. But people do manipulate the stock like that. They do.
For sure.
I have some issues getting to this thing.
So on the small, especially on small cap and pre-market, especially pre-market too. Sorry to cut you guys off, but pre-market's
You're good.
You got to be very careful. There's a lot of manipulation, and there's lower volume in pre-market versus market open, and just even in general, it's a good guide, but I wouldn't.
You have to be watching your charts while you're watching the level 2. You can't just look at the level 2 because I promise it's a disaster waiting to happen. I trade the level 2. I trade the level 2 on supports and resistances. I don't just trade on the level 2. Let's get that clear. So usually on the level 2, if you look at a support zone, you got big buyers on the bid side. So these sizes of these orders on a stock like Tesla, you're talking about there could be $10-20 million positions that are holding at a support zone. So that's why when you see Tesla go to 370 and you have a big buy on the bid side at 370, that's why it takes so long to break through it, because those sellers are trying to eat off that bid. If it doesn't break and the bid doesn't break, the buyers take control again. So you really have to watch it second by second if you're going to use the level 2.
I'm just going to pull up an example of it. I don't know what's with this thing. Actually, I know how to do this. I could show you Bookmap on here too.
Yeah, just there's a lot of manipulation with VWAP. Sometimes there's a lot of manipulation on the level 2. So, you just always have to wait for your own confirmation on key levels.
You use it all together with everything else we're teaching you guys. Everything. VWAP, level 2, candlesticks, support and resistance zones. You got to use everything, the full circle, to really master trading.
Yeah, it'll come in time too. I know it probably seems like a lot of information, but
My bad,
you know,
y'all.
we're here to
I'm having
help
some technical
you guys out.
difficulties. But this is pretty much what you'll see on level 2.
Okay, so on the left side, you have the buyers. That's the bid. And then these are listed from highest price to lowest. And then on the right side, you have the sellers, which is the ask. And these go from the lowest price to the highest. And then the difference between the bid and the ask is called the spread. So let's see here. Where you have... Okay, so see right here, the bid is at 916, and then the
That's not even the same thing.
yeah, this is a weird one. Okay, either way,
Okay.
so
Yeah.
the bid and ask, the difference in that is the spread. So for me, I usually look for a small spread, which means it's a high liquidity stock. If some of these stocks have like dollar spreads, a stock like Billy's, you could see a spread over $1 on some of these stocks if it's not really moving. Billy's trading them with a high volume, but if the volume falls off, the spread gets bigger because there's not as many buyers and sellers. So high volume, a lot of trading activity is a small spread, and then large spreads are low volume and they're more risky. I don't trade anything with a spread over 20 cents personally.
Yeah, and I know a lot of guys have been asking me about like these random small cap stocks, and if there's no volume on them, like don't trade them. Like,
do not
very
trade them,
simple.
because guess what?
Here.
If you're trying to sell your stock and you have a buyer, say at 91
I
cents,
pulled up I was gonna pull up a demo on Tradeovate here.
if you have a buyer at 91 cents and the next buyer is at 79 cents, you're selling your shares at 79 cents. You're taking that loss. And if you place an
Yeah.
order, you'll see your own trade on the level 2.
So you see right here, guys, see the live bid and ask here. This is on Tradeovate, so it looks different on every broker. Let's just show you an example, which you'll see in real time. I want to see if I can show you one. Anyone here ever use Bookmap? Do you guys know what that is? Okay.
I know what it is. I've never used it though.
Okay. I'm gonna see if I find an example of Bookmap too. There's a guy who does a live stream of Bookmap on YouTube.
Another thing on the level 2, you'll see lower numbers. Like you'll see a 1, like the size, you'll see a 1, you'll see a 10. You have to add 2 zeros to that to get the actual amount of shares. So say you have a size of 10, that's 1,000 shares.
Is that showing, by the way, or no? Or is it blacked out?
I can see
No,
it's just very small.
Better?
It's like
Okay.
stretched out.
So basically, just to get an idea what Bookmap is, it's going to be a combination of your level 2 data, but you kind of see those little dots moving there. It's a heat map to show you where the orders are stacked at. So it takes time to fully know how to use it too. And you have like these levels, these orange kind of lines up here, and you see the more orders are stacked here. Those are higher levels of liquidity you might expect the market to gravitate to. We would need a full lesson on doing this just to show you an example of tools people use to read volume in the market, because at the end of the day, that's what drives price in the market. So people use different tools to get a different read on it. So you have like the tape itself, your level 2 data, market depth, and you have depth of market, which is the DOM itself, which is like a vertical ladder. That's just going to show your the bids left and you're asking the right. And then you have Bookmap. So that's like a liquidity heat map to show you where it's at. So that would take a whole nother lesson to go over, but I just want to give you guys examples of different tools people use to read volume in the market.
Yeah, I would love to have a lesson to show you exactly how I trade on the level 2. Like if I see a large
recording or something for them.
If I see a large order, and it's getting eaten away, I would love to show on live time, like how exactly I'm making that trade, because if I see an order, a 50,000 share order, and it's getting eaten, going 30, 20,000 shares left. Once it breaks that order, it's making the move. that order is holding the stock up. So these big orders are either making a wall or making a giant area of support for a stock. And
So
it's very important.
What Brett's saying by getting eaten up, he's meaning that 50,000 share order is sitting there, right? It's sitting at a certain level that you're going to see on the level 2. And the more buyers that are testing that level, it's getting eaten up. So the buyers are taking away the orders that are stacked there. And eventually there's no orders left there and price breaks through. Does that make sense?
And you see very big price bursts through those orders every time. So
yeah. And you're seeing it happen on charts in real time. So when you're looking at like Tesla rejecting and testing 400 or whatever, there's a large amount of orders that are there. If it breaks through, like Brett was saying, those orders are getting eaten up and continue to test. There's more buyers who are absorbing those orders that are stacked at that level.
But guys, you're watching this real tick by tick before the chart's even made. So your lag time, you're actually ahead of the move using this tool. It's a very good tool to use, and I would encourage everyone to check it out. And then I will make content on it to actually show you how I use it.
For sure. Cool. That was that. Yeah, I think. Oh, look, see number 6, graduate to order flow. That's a more advanced. Like I would say, honestly, guys, using order flow and level 2. This is not like this to anyone. It's definitely more advanced. You want to get first more comfortable reading a chart itself. You know, I think when you're starting out, you want to be able to read a chart, understand support and resistance, understand how to use VWAP, use your EMAs. And it's kind of like the foundational point of understanding those things. And then you incorporate these more advanced tools to really get a read of what's going on. I call it under the hood. Like if you go to a mechanic, he's not going to just say, oh, your engine's blown and not look at anything. He's going to hook up a diagnostics to it. He's going to open the hood itself and look at your car and see what's going on. If you're Brett and you have a Tesla, there's no engine, so you don't need to do that. You just hook up a computer to it. But
yeah, we try to simplify things where, you know, we don't want to overwhelm you guys. I know a lot of you guys are new to trading. So once we get all the easy stuff in down pat, you know, then you start working your way into level 2 and all these devices that you could use, the heat map, anything you want. You know, there's tons of different indicators and things to help you with charts, you know. So that we could write a book on how many indicators there are. You know, we could really write a book on it. There's thousands.
I have one right here. Look how fat this book is. Like there's a lot to learn.
Which one is that?
Technical analysis of financial markets.
Nice.
This is actually a good book. This is mostly about just patterns and things like this. Is actually a really good book. It helped me learn a lot of patterns and about volume. This is a good book. But I would say that to Brett's point, we don't want to overwhelm you guys. So the goal is there's thousands of information, a piece of information out there. There's also thousands of ways to trade, you know. I think we want you guys to understand is the basics. You don't need to learn 100 strategies. You need to find one strategy that works for you and stick with it. You know, just because one thing's not working one time doesn't mean to throw it out the window and jump and find a new strategy. I think the best thing you do is keep it simple. Kyle Cobb, I see you joined, man. What's up?
What's up, bro? How you doing?
Good, man. I was just talking about keeping it simple. Like today, like you had a plan for SPY, right? You were looking for a low day break or a high day break. And you kept it simple. You didn't use level 2. You didn't use a heat map. You didn't use any of that. You used simple support and resistance levels, you know? You waited for your confirmation.
I try to keep it very simple.
Yeah, and I'm sure you know, Kyle, you've been trading for a bit. The more complicated you make it and try to crowd your chart, the more difficult trading becomes, you know?
Oh, it gets crazy. Yeah, you don't need a whole bunch of different indicators. You know, just a couple that you can get used to. I think the simpler the better.
It really is. Simpler the better. 100%. That's how I trade. I trade very simple, guys. Just
Yes,
you know,
yep.
You can really get confused and overthink this process, you know. So
They too, even like, you know, a lot of people use like MACD or RSI, and for like small caps, those like don't matter. You know, it's all about just trend and like key levels and VWAP. You know, because something could have an RSI under 20 and it could keep selling off.
It can keep going and go to zero.
You know, even car is a great example. You guys look at that chart, bludgeoned like the past 2 days. And there's probably many times on that chart where RSI was under 20, but it's all about just being in that downtrend and the short sellers being in complete control,
100%. Cool. We've been here for a little bit. That pretty much covers what we wanted to go over tonight. We wanted to combine these two into one, but they're tools that go hand in hand, volume and VWAP. Does anyone have any questions on anything we covered, or any general questions from anything we talked about this week, maybe, or anything in general? We could do a little open Q&A.
How did everyone do this week on trading? Good? Bad?
Some good,
So far,
some
pretty
bad.
good. Week's not over yet.
Yeah, there we go, Kyle.
That's true.
Tomorrow we're going to find a 500%er.
Let's do it.
Probably not. I'm just kidding, but hopefully that'd be great.
Please, I
Just
can
the way
use
the
one of those
small
right
cap
now.
market is my dog just chilling on me. But yeah, we'll see. We'll see what tomorrow brings. We'll find one. I'll promise we'll find something, but probably not 500%.
Yeah. Anyone have any questions, or it could be anything in general?
Jay, could we go over more entries on SPY or just any liquid large cap?
Yeah. So let me ask you this: what are you looking at when you come into trade in a day for the entries you're taking?
Exactly what do you mean by that?
So when you're looking to take an entry, say you're day trading SPY, right? What kind of setups are you looking for? I think that's the biggest thing with trading SPY, because I could show you maybe 10 different entries to take, but I think about the best thing with SPY or liquid stock, and Kyle Cobb, we use you as an example again, is to have a certain setup you're looking for. When you come into the market, you need to have a game plan and what kind of setup you're looking for. Like what Kyle shared this morning, he was looking for a high day break and he wanted to take a back test longer for that for a small scalp, or a lower day break and a back test off of that level for a small scalp. So are you looking to trade mean reversions? Are you looking to trade VWAP, rejections? There's like 1,000 ways to skin the cat with SPY.
Right. So today I took a bounce off the 20 EMA, and I took a call at I want to say 9:35 this morning.
Mm-hmm.
So I looked at the 10-minute, watched that. I seen a bounce off the 20 off the 10-minute, and then I jumped in a call. I took that up, but it rejected off of, I want to say, the highs. I think it rejected off of 711 or something like that.
Mm-hmm.
It pushed down. I held through the play. It retested. I think it retested VWAP and the 20, and I just held it on the 15. I watched it on the 15 as well, and then it ended up pushing up. I ended up selling. I only made a little bit off of it, and then later in the day it fell to hell because I guess news came out, and I took a short on that. I jumped in it late because I was scared to chase.
Okay. Yeah. I think the biggest thing the reason people trade SPY or trade one name every day is that you could find repeatable setups to trade on every day, right? So if you're taking plays up to 21 EMA, that means you're trading mean reversions, and you need to be using some kind of volatility bands, whether they're ATR bands or something like that, right? You'll be using something like this. So, and another word of advice to you, I personally think you should leave the first 15 minutes alone. That's just me, especially with SPY. Kyle, you trade SPY. What do you think?
The first 15 minutes, the volatility is insane. You have no direction.
A ton of fake
stay away
outs.
from that completely.
Yeah, a ton of fake outs. And if you're using 5-minute candles for confirmation, think about it. If you take a trade at 9:35 a.m., you only have one candle to work with off the open. And another word of advice, just me personally, if you're trading SPY, you could trade the ES chart and trade SPY still. ES is way more liquid than SPY. Like SPY, ES doesn't follow SPY. SPY follows ES. That's the futures index. So you could do. People trade SPY and still do well. That's just my personal preference. I think it makes more sense to trade off of the futures index because you have more liquidity as well. Futures trade 23.6. SPY trades regular market hours, you know? So you have, not only do you have regular trading hours, you have extended trading hours. Like like SPY is moving right now, but it's not moving. Look, S&P is moving right now. It's open. But you won't see it on SPY because SPY is closed. It's the ETF. But if you're looking at it
Right.
on the futures index, look, it's moving right now. We're holding a 5-minute mean here, you know, or we're trying to break down under it. But when you come in the morning, you can be like, all right, I see the levels that we tested. These levels that are happening right now, SPY is going to react off these levels tomorrow. Even though they're happening in overnight, they're not going to show up on the SPY chart. They're on the ES chart. You know, so that's another word of advice for you for that. And you have a gap up here that's on extended trading hours. So you'll see that here. But yeah, so I think with SPY, there's a lot to trading the indexes. You really need to have a system of what you're looking for. Like for me, I'm trading mostly mean reversions. That's what I'm looking for mostly. I know that I like that best. You also could incorporate some other things. You could do failed lower day breakdowns. You could do failed high day breakouts. You could do breakouts and retests. Some people pay initial balance. There's that one. So there's like, I hate to say that answer. There's so many ways you could go about trading this, and that goes for any stock. But if you're looking to trade the same ticker every day, the goal is to have repeatable setups and maybe have 2 or 3 setups you're looking to trade and only trade those. And you don't touch a market unless those trigger. Does that make sense?
Yeah, so initially, like most of this week, I was trying out initial balance, trying that setup. But I mean, like I think Monday I got a win. Tuesday I probably took a loss. What's today? Thursday. I took a loss yesterday, and then I was like, I think I missed the move yesterday, and I got like annoyed. So I like was like, you know what? I'm not even gonna do initial balance. I'm just gonna trade like if I see a bounce off of the EMA or off of VWAP, I'm just gonna take that trade, which is
But
I know it's not the right way to
no,
do
I
that.
appreciate the
That's
honesty on that.
emotion.
But here's the thing. If you're trading initial balance, you can't trade the first 5 minutes of the market. You need to wait for the first hour for the initial balance to set itself.
Yeah, I know.
Yeah.
So
So like
today I didn't do it today. I was just like,
okay,
you know
got you,
what?
my bad.
Since I waited like yesterday and missed a move yesterday, I was like, I'm not gonna do it today. I'm just gonna whatever I see, I'm just gonna react and then take a trade.
Yeah, no, I got you. So here's the thing though. That's kind of what I was talking about before. If you don't play one strategy so the market's all about data. Like this chart is all representing data, right? There's certain things that happen. It's all data. That's all the market is. If you trade multiple different strategies, you're skewing your own data set and you're never going to have a system or know what's going to work or what doesn't work for you. Because if I trade 10 different strategies, I have so many variables in my trading that I can't determine what went wrong when. Does that make sense?
Yeah, that's basically what happened.
Yeah, no, and I appreciate you being honest about it because I went through that too, Kyle. You trade like I think people who trade the index see that more than anyone else. If you're trying so many different strategies always, you're gonna always be in this weird lull of wait, this is not working. Wait, this did work. Wait, you don't know what works then because I tried 17 different strategies and now I don't know what works anymore. I would find maybe 1 or 2 things that you like trading. Like say you like trading mean reversions, trade that for 2 weeks straight and see what your success rate's like. You know, you're narrowing down your variables. It's kind of like the market's a casino and you have to be the house. There's no rules in the market. There's no rules. You could stay in a trade as long as you want. You could take as many trades as you want. It's up to you to be the house and make the rules. So the rules could be, all right, I'm only trading this one type of setup, only trading these 2 types of setups, or I'm only trading between these hours. You know, you have to have a set rule set that you're using to control the parameters of the market being a casino.
Yeah, that's why I kind of like the initial balance because the first hour it's like get all the craziness out the way, and then after the first hour, okay, like let's see what's gonna happen. But I don't know. Sometimes it's like I wait a whole hour and I'm just like, all right, now I need to get into a trade, which it's like the emotions taking over again too. And I know that, but like
Yeah,
sometimes heat of the moment, it's just like,
of course. It's easy in hindsight to say, oh, I'm not going to do this. And then like you get in front of the
yeah,
screen, you start pressing buttons. Of course, it
yeah,
happens.
I've done it so many times now. It's just like, all right. And then now, in hindsight, I'll be like, oh yeah, I shouldn't have done that trade. And then after I already lost on the trade, I'll look at the chart and be like, I'm an idiot. Like it's showing clearly, clear as day, it's going to get rejected here. Why
Yeah.
didn't I?
Guys,
do
if you read these books, half of trading is psychology. I mean, it's all about your mindset going into the trade. You have to have full confidence in yourself and do not be chasing FOMO. Everyone gets the FOMO feeling. Oh shit, I missed this trade. I got to make up
cares?
for it.
Who cares?
You
The
know,
market's open tomorrow.
there's always market always gives you my opportunity. It might be a week from now, or a month from now. You will get an opportunity to get a discount on the name that you're liking. So, you know, obviously, yeah, we can have a parabolic stock like SanDisk, or we can have something that just never goes down, you know. But most of these stocks, they retrace. You're gonna get the discounted price. So why rush into a trade? And if you don't sell it on time, you're going to be stuck buying. You're not going to be able to buy the dip.
Yeah. And even with
So
day
it's all
trading too,
opportunity.
the same thing, you know, that Brett's saying, like maybe it's not a SanDisk, but say you're playing SPY and it's super overextended from your EMAs. You're like, oh shit, I got to chase this now. Like, no, it's going to come back to one of the EMAs at some point. And if you're too impatient to wait for it, that's fine. Shut your screen off, go about your day, set an alert. And when it's retest that EMA, then you watch the reaction there, you know, set your alerts. Like what, Kyle, I'm calling you again. As I look at your chart and I like what you did. You set you set an alert at high of day, low of day. You waited for one to trigger and you took your trade.
Yep.
Is that pretty much what you did? You just set your alert and you let it trigger, right?
That's my strategy. Like it's very, very simple for me. Like I have a range, I wait for a breakout. And I mean that's really it. That's my bread and butter. I just wait for those plays. You know, for me, I've tried several different strategies, but that's the one where I have the highest success rate, and that's all I do now. You know, and
And
that's all I
it might be
wait
a little
for.
boring some days. You're waiting around all day, but guess what? It's okay to be bored. You're making money.
Oh, 100%. If it has a high likelihood of success, I just do that. It's almost like fishing. I just throw my
Mm-hmm.
rod in the water and just wait for my fish.
Great
So
analogy for sure.
is that high of day and low of day, or are you trading like pre-market, high and low, or
It,
yesterday's high and
uh,
low?
I definitely don't trade pre-market. I don't trade. I wait for some type of either range, or if you know, if the price is reaching some level of strong support or resistance, I wait for that break and I wait for confirmation.
Okay.
Yeah. So, Colin, I would say this too. There's no one right way or wrong way to do this with SPY or QQQ. Like, there's multiple ways to trade it, and you could give the initial balance thing a try, or what Kyle's talking about a try. It's about finding what works for you, and the only way you know that is by doing some back testing. And while you're learning what works for you, size down. There's no shame. Trade one contract.
Oh,
Get some data to
trust
know
me,
it works.
trust me, I do that. Trust me.
Okay, good. That's good. So you're not sizing up. That's good. That's
No,
good.
no, no, absolutely not.
For sure. For sure. But hopefully that helped. And I know I didn't give you a direct answer on what to look for, because there is no one direct answer on what to do for trading the indexes, you know?
Right. But I didn't know about the ES, so that is something I could look into.
For sure. I'll send you some stuff to look at too. I'll send you a few things. All right.
All right, cool. Appreciate you.
Cool. Got you. Got you. Anyone else have any general questions, comments, anything we could help you with? All right. Going once, going twice. I'm gonna go watch the rest of the Knicks game. Cool. Well,
Definitely.
I appreciate you guys as always. Thank you for joining. I'm gonna drop the recording in chat. We'll do another one next week. I gotta come up with a topic, but I think Brett, we kind of covered the main things we needed to for like the basics. We covered support and resistance, candlesticks. We have moving averages.
Yeah,
Now we have
we could
VWAP.
go. We could do chart formations like head and
Yeah.
shoulder, like different chart formations that we could get more into the level two. I don't know how much you want to get into the level two until everyone masters
Yeah.
the basics first.
For sure. For sure. Maybe do an overview. Justin, my bad. Do you have your hand up?
Yeah, I was saying that for topics, I think entries and exits would be really cool to learn from you guys. How to enter into a trade, how to exit out of a trade, stop losses, all of that. Brett was kind of coaching me through dollar cost averaging into one of the names that he mentioned in the chat, but would love to see what intraday trading looked like. Let's say for Billy, I would love to see what his entries look like, what his exits look like, writing candles up and whatnot. That'll be really cool.
For sure. That's a good one
Okay.
too. I think we could do is more like a tying it all together kind of class, right? Tying together support and resistance, your moving averages, your VWAP, and how we're looking for entries from like finding a setup. Say hood was one I mentioned a few weeks back, finding it on a higher time frame for a swing, and how you go down to a intraday setup to get an entry. So that's a good one too, kind of tying it all together. For
Yeah,
sure.
we
So
can break
thanks
it
for
down
sharing.
from large scale all the way to the small
Mhm.
time frame. So we
When
can
to
show you
cut
what exactly.
losses,
Yeah.
not holding on to it so much. That'll
Yeah.
be really cool to learn.
Risk management is definitely going to be one for sure too.
Yeah.
Colin, you had your hand up again?
Yeah. Also piggybacking off of what Justin said, maybe also for options traders for intraday, which contracts to pick. I'm not sure if we already went over that type of
That's
stuff.
definitely coming. So the reason I'm doing these is to get into doing options next. So definitely want to understand the basics of charting and then get into picking options contracts, because a lot of people don't know how to pick